it's okay to have a favorite asset class. It's not okay to say that one single asset class is going to be the best thing for everybody. Is real estate better than stocks? Or are stocks better than real estate? In today's video, I'm going to uncover why this is the dumbest argument. My name is Nikki Dunn. I'm a registered investment advisor, certified financial planner, and author of the book, Do This With Your Money. Link below to grab your copy. And in today's video, we are going to talk about people arguing that real estate is the end-all be-all asset that you should own nothing else. Stocks is the end-all be-all, you should own nothing else. Let's unpack this really silly argument and why it's silly. Here is the tweet that sparked me to do this video. This person, Jason Lee, they tweeted, "A hill I will die on. Real estate is greater than stocks. It's not even close." Seeing all of these stock-related posts on my feed shows me that most people don't get this. The extremely wealthy people understand this. We will touch on that in a little bit. Nothing else gives you appreciation, cash flow, tax benefits, and principal pay down. Okay, so whenever I see these types of tweets, the immediate thing that I do is I go to their profile and I'm like, they must be in real estate. And of course, this person is in real estate. I guess he's a real estate agent. He invests in commercial real estate. But it's funny because when we see these matter-of-fact statements that only go in one direction, you can almost always count on when you click on their profile, they're going to be basically selling you that exact something in relation to that asset class and nothing else. So obviously, this person is biased, as are a lot of people that are financial gurus on the internet. A lot of them are focused on one thing and they're selling that one thing. And that's not bad. There are people out there that are masters of their crafts, and teaching other people how to do what they do to make money is a great thing. But assuming that that's the only asset class that they should own or the only way that they should be building wealth, and as somebody that's dealt with clients in real life financial situations before, I can tell you from wealthy to not so wealthy, that's not how the real world works. Even people that have made multi-deca hundreds of millions of dollars end up diversifying into multiple asset classes. Let's unpack this sentence. Seeing all of these stock-related posts on my feed shows me that most people don't get this. This meaning that real estate is better than stocks. Well, real estate is a lot of work. And anybody that's actually done real estate, people that I know that have owned real estate investments, they've told me straight up, and I've had real estate investments myself, it's work. And getting the right people to do the work, to do the right job, in construction, it can be challenging to manage a fix and flip. It can be challenging dealing with tenants. And it's just something that isn't passive, really. And yes, you can hire that out, but guess what? That's going to eat into your profits. It's going to eat into your cash flow. So there's a cost to everything in real estate. And that's what makes it kind of a trickier asset class. A lot of people don't calculate their real estate gains properly. In fact, one of the most popular papers, The Rate of Return on Everything from 1870 to 2015, even states in the paper when calculating housing returns, equity as well, but we're talking housing right now. When calculating housing returns, we do not account for taxes, and this includes property taxes. So even this paper, which a lot of people rely on, it isn't accounting for property taxes and terms of housing returns. So a lot of people, individuals and families that own real estate, especially in the United States, they're just looking at what they purchased their home for and what they're selling their home for. But there's a lot of little hidden costs in between there: property taxes, mortgage insurance, homeowners insurance, maintenance, and even beyond non-investors, investors even sometimes don't properly calculate this. In terms of him saying that the extremely wealthy people understand that real estate is greater than stocks, well, extremely wealthy people are very diversified. You don't usually see somebody who's extraordinarily wealthy only owning real estate and that's it. There are many reasons for this. For one, it's not liquid. Of course, if you have enough real estate that's positively cash flowing and you've got really low cost basis on it and high, cash flow, maybe that doesn't matter to you. but there are so many risks with real estate, especially occupancy. If anything happens to the property and you have to spend a lot of money to fix it, maintaining the property, a lot of things that a lot of really wealthy people kind of want to start to diversify their wealth out, reduce risk, reduce stress, and just get liquidity in their portfolio because real estate isn't very liquid. And when it comes to tax benefits, it's true. There are a lot of tax benefits to owning real estate. Depreciation, however, guess what? That depreciation, if you sell your property, the IRS wants to be paid back for that depreciation that you took. So guess what? Go Google depreciation recapture. The government is going to want a piece. The only way to really avoid that is to roll it into a 1031 exchange. However, to really realize the benefits of this, ideally you want to be passing your property to your heirs when you die to get that tax burden away from you, because a 1031 exchange is a deferment of tax. You're going to have to die to basically completely eliminate the tax burden. And then there's things like passive activity loss rules that a lot of people don't know about. You may be buying all this real estate thinking you're going to be great and good to go on your taxes, and then you find out, hey, this is considered a passive activity for you because you are not a real estate professional and you have this other job, so you're not working on real estate full time. And so this is going to be a passive loss. You can only net passive losses against passive gains. You cannot net them against active income. There are some rules around this. You know, some people try to become a real estate professional. Others that don't make over $150,000 may be able to deduct up to $25,000. But if you're making over $150,000 in terms of your adjusted gross income, and you have a lot of losses in real estate from these depreciation deductions and tax benefits, well, you may find yourself in a passive activity loss scenario, and you may have to wait to benefit from these tax losses at all. So it's clear to me that this person is pretty biased. And even if you flip it to the other side and say that stocks are the best asset class and the hill I will die on is that stocks are greater than real estate, well, it's not a matter of one asset being greater than the other. I think that a lot of assets are there to work together and to help you achieve financial freedom in the best way possible that's going to help you sleep the best at night, right? If you have too much real estate going into retirement, guess what? You're going to have to really make sure that that cash flow from that real estate is dependable. And if it's not, you are going to be in a bad situation that maybe having a equities portfolio or a bond portfolio could have fixed or could have really helped you out. So you don't want to be in a situation where all of your wealth is tied up into real estate when you get into retirement, or maybe even when you do end up in an estate situation when you're passing, your heirs have to sell off properties to even be able to pay the estate taxes if you're wealthy enough, if you end up getting up into that upper echelon. So there, you're going to want to make sure that there's some liquidity there, either by other assets that are more liquid like stocks or bonds, or make sure you have a good life insurance policy in that case if you end up owing estate tax. So I think that there's planning that needs to be done, because if you go all in real estate and that's it, you could end up in a situation that won't be ideal in retirement, especially if something happens with the economy and something happens to that cash flow and that occupancy, right? Let's talk on the non-real estate investor side and just using real estate in your portfolio, like your home and the wealth that you build in your home. I don't necessarily view wealth built in your home as something that you need to depend on, because when you get into retirement, you can take out cash. You can do a cash out refi. You could do a HELOC, but that's not going to be ideal if you're in retirement on a fixed income and depending on your withdrawing from your assets, and you're depending on a specific amount to be able to survive. Adding on debt from taking cash out of your home is not going to be good for you if you're on a fixed income in retirement, or maybe your assets are just barely kind of covering you. So you want to allow yourself to have a nice buffer. And that's why we buy real estate and put it in the portfolio earlier in life, so that that later in life, when we get to retirement, it's going to be paid off. We are going to have more clarity on our cash flow, on our expenses. We're not going to have to worry about rents going up. This home, it's paid off now in retirement. That equity's there, okay? It's there, but you don't really want to dig into it if you can avoid it. So in my opinion, actually, if you were to ask me, would you rather own real estate or equities? I will say equities. But I'm also going to say, but I also want to be able to have a house that's paid off when I get into retirement, because that's going to help me out a lot. Now, if you have a lot of assets that you'll never spend, that's a different conversation. You have a bit more flexibility probably with how you're investing and what your withdrawal rate is going to be. But for most people, equities are a really easy asset to own. They are tax efficient, meaning you can hold them and have long-term capital gains, and you can just pay tax on dividends if it's in a taxable account, or put them in a retirement account and even better, get even more tax efficient there. So I feel like equities are a great asset, and I would probably choose equities over real estate, but I also don't want to say that equities are the best and that's the only thing that you should own would be equities. I don't believe that. So in this paper, the rate of return on everything, there are two samples that they use. The full sample from 1870 to 2015 and then 1950 to 2015. And, the full sample is showing that housing beat equity returns in terms of real returns after inflation is accounted for. But as of recent history, it looks like equity returns have outpaced housing returns. And remember, property taxes are not going to be accounted for in housing returns. And this is globally. And here's another way to look at it. This is from Visual Capitalist, the growth of $100 by asset class going from 1970 to 2023, which, this is kind of, we really need this paper to be updated through 2023 if we could. That would be ideal, because a lot of return came over the past 10 years in the stock market. In terms of equities, they are truly the most passive way to invest, and that's why a lot of people love them. Now, of course, I'm not saying that they're the best investment over everything, because that depends. Depends on your lifestyle, depends on your tax situation. It depends on your just overall desires and wants. Like, some people don't want to touch real estate with a 10-foot pole. Other people, it's all that they want to own. So it's just financial situations are too different to say that one asset is going to be the best over the other. But when we are looking at these types of numbers and the actual performance of the asset classes, it's very clear that equities are a great asset class to own. And so for this person to say that real estate is greater than stocks, well, on what basis? And who are you talking to? Because I know plenty of people who would flip it the other way, that stocks are greater than real estate, including myself. I'm one of those people, but I'm not going to say that one asset class is the best over another. I'm going to say that a diversified approach is always going to be the best thing for taxes, for liquidity, for risk, for lifestyle, for cash flow needs. It's likely going to be a mix of things for most people. So I think that this argument is really stupid, and it's just not based in reality of how I see most people's financial lives working. Real estate's great, stocks are great, bonds are great. I mean, I'll tell you, if you are a 65-year-old retiree, you're going to love bonds. You're going to love that preservation of capital. You're going to love your real estate equity. It's going to make you feel safe. You're going to love that conservative approach. But if you're a 20-somethings world traveler, owning real estate is probably going to give you a really, really, really big migraine. That person will probably be better off owning a truly passive portfolio of equities, right? So it really just depends. So what do you think? What's your favorite asset class? It's okay to have a favorite asset class. It's not okay to say that one single asset class is going to be the best thing for everybody, no matter what. Don't diversify. Just do this one thing, buy this one thing. There's a big difference between the two. All right, if you haven't already grabbed a copy of my book, Do This With Your Money, go to the link in the description below and grab yourself a copy. If you're interested in all of my offerings, check out the description below. I list them all there for you. I've got you covered no matter what you're trying to achieve financially. If you like this video, go ahead and smash the like button, subscribe if you're not subscribed, and I'll see you next time.